In early 2017, President Donald Trump reportedly made a late-night call to his national security advisor, Michael Flynn, asking whether a strong or weak US dollar was better for the economy. This question, while seemingly basic, underscores a complex economic issue that many find challenging to answer. The strength of the dollar has significant implications for various sectors of the economy, and understanding these can provide insight into current economic conditions. When people talk about the US dollar being strong or weak, they're really talking about how much it's worth compared to other countries' money. If the dollar is strong, it means it can buy more foreign currency. So stuff we import from other countries costs less, and trips overseas are cheaper. But when the dollar is weak, your money doesn't stretch as far. That can make imported items more expensive here at home. On the flip side, a weaker dollar can actually be good for American businesses that sell products to other countries, because our stuff becomes more affordable to them, which can help boost exports and support US jobs. As of April 2025, the value of the US dollar has dropped by almost 10% since the start of the year. That's a pretty big fall. And it's now sitting at its lowest point in 3 years when compared to other major currencies. So, what's behind this slide? A big part of it comes down to trade and trust. The US government has been slapping heavy tariffs, basically taxes, on imported goods from countries we do a lot of business with. This move has upset some of our biggest trading partners, and they've hit back with tariffs of their own. All of this back and forth has made the global market uneasy. As a result, investors are getting nervous and putting their money elsewhere, outside the US, which pushes the dollar down. Another reason people are worried is because of the drama surrounding the Federal Reserve, which is in charge of setting interest rates and keeping the economy stable. President Trump has publicly criticized Fed Chair Jerome Powell and even hinted at possibly replacing him. When politicians start interfering with the Fed, it makes investors really uncomfortable. They worry that decisions meant to keep the economy steady could start being made for political reasons instead. That kind of uncertainty can shake up the markets in a big way. Because of all this, trade tension and political pressure on the Fed, investors are pulling back from US stocks and bonds. That's not something you see every day. Usually, if one area drops, another might go up. But this time, everything is taking a hit: stocks, bonds, and the dollar. That's a clear sign that investors are feeling uneasy about the direction America's economy is heading. Bottom line, the dollar's drop is a reflection of deeper concerns about how the US is handling its economy. When people lose faith in our leadership or fear things are getting unpredictable, they move their money elsewhere. To turn things around, we'll need strong, steady policies that rebuild trust and show the world that the US economy is still a safe bet.